Hi there, in this video we will talk about one of the most important elements of the scalper trading terminal, namely order book. What is the order book? The term order book refers to an electronic list of buy and sell orders for a specific instrument organized by price level. An order book lists the number of contracts being bid or offered at each price point or market depth. There is a buyer zone or bid in a green color or seller's zone, ask in a red color. There is a small space between these two zones called spread. It indicates the current price. The lower spread is, the more volatility the instrument shows. The most important thing that each side contains limit orders. There are orders of participants placed in the order book in advance, buyers' orders and sellers' orders. For example, the price can't go higher unless it executes the limit orders of sellers on its way, and vice versa. The price can't go lower unless it executes all the limit orders of buyers on its way. In other words, limit participants could really hold the price, creating support or resistance from their huge limit orders. The larger and stronger limit order is, the harder it's for price to overcome it. The core advantage of being a limit participant is lower fees, 0.02% per trade, than of market participants, 0.04%. Being a limit participant, you provide a liquidity for the exchange, being a maker, while market participants grab the liquidity and called takers. But market participants is the topic of the next video about the tape. Next time we will talk about the market participants and the tape, and the market participants are those participants who in fact execute all these limit orders. If you have some questions, please ask in the comments below.